net zero emissions by 2060 in order to support the global fight against climate change and meet the country's energy transition plan. To kickstart the process, the government announced that Nigeria would raise an initial $10 billion support package ahead of the COP27 meeting in Egypt. It also stated that a $23 billion investment opportunity had been discovered based on current in-country projects and programs that were specifically focused on the energy transition. Also, there will be incremental investments from 2021 through 2060 to attain the plan. The Minister of Transportation, Muazu Sambo, has disclosed that out of the 147 billion naira budgeted for the ministry, 52 billion naira, representing 35%, has been released. Sambo made this disclosure while presenting a budget to the Senate, where he said 38 billion naira had been utilized. The minister also informed the lawmakers that the ministry, through the support of the committee, was implementing the Nigeria Railway Modernization Project and progressively expanding the railway network through yearly budgetary appropriations, following the challenges being faced in securing counterpart funding. The Executive Director and Chief Executive Officer of the Nigerian Export Promotion Council, Ezra Yakusak, yesterday disclosed that the federal government recorded the highest performance from the non-oil exports this year, with the total value hitting $2.5 billion. This, he said, represents 62.3% compared to $1.6 billion recorded during the same period in 2021, adding that the non-oil export performance of the country has been on the onward move. He also stated that the sector is crucial to the country's development of non-oil exports. Its potentials is not being fully realized. A forum should be organized to address the problems that each state operations are facing and to jointly propose practical solutions. The National Agency for Science and Engineering Infrastructure, NASENI, stated its intention to collaborate with partners from Hashemite Kingdom of Jordan, Czech Republic, and Italy in equipping 6 institutes across the country. The Executive Vice Chairman and Chief Executive of NASENI, Professor Muhammad Haruna, disclosed this while showing the Chief of Staff to the President, Professor Ibrahim Gambo, around the Agricultural Machinery and Equipment Development Institute in Lafayette. According to him, the agency is trying to revolutionize agriculture in the country in order to guarantee food security. He also added that the focus of the agency is on how to transition the nation from a community-based economy to a manufacturing economy. The Nigerian Communications Commission, NCC, has inaugurated an industry-wide committee to facilitate the deployment of broadband infrastructure under a project named National Communications Backbone. The National Broadband Infrastructure Joint Committee is saddled with the responsibility of supporting the drive towards the realization of the NCB targets as outlined in the Nigerian National Broadband Plan, and also to address the need to inject a broad-based industry approach to address challenges impeding the actualization of broadband targets. The committee, in collaboration with the Commission, is expected to design an NCB network architecture and harmonized comprehensive plan that would create a more viable business case that would attract investors and facilitate infrastructure deployment. The African Development Bank has won $31 billion in investment interest from African and global investors. In a statement issued by the Communications and External Relations Unit of the African Development Bank, the African Development Bank President Dr. Akinwumi Adesina said this at the 2022 African Investment Forum, which ended on Friday. Adesina commended the forum's outcomes and partners' commitment. He said the AIF's focus was to attract more foreign direct investment to Africa and ensure the private sector remained the driving force of the transformation. Meta Platforms INC is planning to begin large-scale layoffs this week that will affect thousands of employees. Facebook Meta in October forecast a weak holiday quarter and significantly more costs next year, wiping about $67 billion of Meta's stock market value, adding to the more than $500 billion in value already lost this year. Chief Executive Mark Zuckerberg has said he expects the metaverse investment to take about a decade to yield fruits. In the meantime, he has had to freeze hiring, shorter projects, and reorganize teams to trim costs. Delegates at the UN's COP27 climate summit in Egypt agreed on Sunday, November 6, to discuss whether rich countries would compensate poor countries most vulnerable to climate change for their suffering. This establishes for the first time a stable institutional space on the formal agenda of the COP and the Paris Agreement to discuss the urgent issue of funding arrangement necessary to close existing gaps and address loss and damage.
We achieved our objective, the goal at the heart of the Paris Agreement. We kept 1.5 degrees alive. We have been buffeted by global headwinds that have tested our ability to make progress. Friends, we are not currently on a pathway that keeps 1.5 in reach. And whilst I do understand that leaders around the world have faced competing priorities this year, we must be clear, as challenging as our current moment is, inaction is myopic and can only defer climate catastrophe.
I particularly welcome the agreement of the parties to include a new agenda item on funding arrangements to respond to loss and damage. This creates, for the first time, an institutionally stable space on the formal agenda of the COP and the Paris Agreement to discuss the pressing issue of funding arrangements needed to deal with existing gaps in responding to loss and damage.
All right, so let's quickly take a break, and when we return, the program continues. Do stay with us. Don't forget to join us on all our social media platforms, on YouTube, on Facebook, on Instagram, on LinkedIn, on Twitter. You can chat with me right now. On Twitter, you can tweet at me at Nancy Lo. Hi, phone Naji. You can also subscribe to our YouTube channel at Moneyline with Nancy TV. That's okay. That's it for YouTube that you're seeing right now on the screen. Let's quickly take a break. When we return, we'll have more for you to stay.
Here is a new and refreshing offer from our esteemed audience across the globe. The new AIT Cloud TV is an online streaming service that offers you attractive opportunities to view our rich, exciting, and entertaining programs anytime, anywhere. AIT Cloud TV available on the web on www.ait.app, Apple TV, Amazon Fire TV, Roku, and Android TV. You can also download the mobile app from the Google Play Store or the Apple App Store. Simply connect to the internet, download the app, register, and watch live or catch up on unlimited hours of exciting shows. AIT Cloud TV. TV on the go.
Hello, and welcome to the program. This is Moneyline with me, Nancy.
So we really have to keep thinking out of the box about how to get money to the least accessible in our society.
Everything has to be re-examined in our economy, in our health system.
We are also ensuring that government does not continue to manage this refinery, because government is not really equipped to manage refinery. We need to come forward and do something different, so that we move from a situation of looking at things from purely a consumptive approach to a productive environment.
The government and the people need to really agree on the need for a departure from business as usual.
We are now on the process of recovery. It is what I call a bumpy journey to an uncertain destination.
This is Moneyline with me, Nancy Naji. It's so nice to know that you're joining us again today. I'll quickly take the market barriers. You could see the bench. I will start with Nigeria. They say charity begins at home. So I'll take you through how we traded last week and what we expect for this week. The benchmark all share index increased by 81 basis points last week to close at around 44,269.18 points, and that helped the equity market come to a successful conclusion last week. Additionally, the market capitalization, as you can see right here on your screen, settled at 24.12 trillion naira, while the year-to-date return is still positive, but it has moderated to about 3.63%. There was a time that the year-to-date return was around 15%, 11%. It was just reducing like that. 11, 8, 5. Now we are 3, but still positive. On the other hand, the local bourse saw a total of 23 advances and 48 decliners, resulting in a negative market breadth closing weekly. The value decreased by 1.9%, 1.97%, while the trading volume increased by 190.53%, as you can see right there on the wall. The most actively traded stocks in terms of volume were Sterling Bank, Fidelity Bank, Axis Core, while Airtel Africa and Seplat, as well as Axis Core, topped the value chart. Now, what are we anticipating this week? Market watchers as well as investors are anticipating a decline in the bullish mode as the market's overarching trend continues to be bearish. Now let's move over to other markets across, as I'm talking about money market, FX and co. So let me start with the money market. We saw that the bank rates remained in the single digits for the majority of last week as there were FAC inflows and it increased system liquidity. Both the open buyback, which is the OBB, and overnight rates decreased week over week to 8.5% and 8.83% respectively. That's the overnight rate decreased to 8.83% and OBB was at 8.5%. But due to the impact of the retail FX auction funding, at this week interbank rates are anticipated to be higher. Now let's quickly move over to the treasury bills market, where it was primarily bearish with sell-offs favoring the short end of the curve. Week over week, the benchmark yield increased by about 16 basis points to average 11.34%. Market watchers say that this week will continue to be depressing. That's not really good news. But let's switch over to the local bond market. Last week, the local bond market exhibited a significant bearish trend, with majority of the sell pressures leaning towards the short to the mid end of the curve. We saw that the benchmark yield on average increased by about 16 basis points to 14.82%. Now this week, what are we anticipating? That the bearish mood will persist, albeit with a little bit of cherry picking encouraged by coupon inflows. If we move over to the Eurobond market, I'm still sticking with, the Nigerian market space. The Eurobond market was primarily bullish, with widespread buy interest week over week. The average benchmark yield decreased by about 66 basis points to 13.53%. And what are we anticipating this week? We're anticipating that the market will continue to be sensitive to emerging developments on the international stage, particularly the upcoming US CPI report. That is the consumer price index, that's inflation. When you hear CPI, we mean inflation. Now, at the investors and exporters FX window, because what is happening right now in the economy, a lot of people, majority of people are worried about how the Naira is trading against a basket of major currencies, especially with the sterling, that's the pound sterling, and the US dollar. the Naira lost 17 basis points to $1 to trade at 445 Naira on November, last week. On November 3, 2022, we saw that gross foreign reserves of the central bank was at $37.3 billion. Now, as of this morning, just before I came into the studio, I had to ask some currency traders, especially like the BDCs, and they did tell me that the Naira is exchanging for 875 Naira to $1. That's the Abuja rate now. I don't know what Lagos is doing right now, but it should be about that range also. So the Naira exchanges for 875 Naira to $1, and 1 sterling pound is costing 990 Naira as at this morning. That is not pretty at all. The Naira is continuing to depreciate at an alarming rate in both the BDC and the parallel markets. The question will be, what can really be done to save the Naira at this point? You will recall that just a few days ago, the Central Bank of Nigeria did announce, according to the Central Bank of Nigeria's Governor Godwin Emefiele, that the Central Bank of Nigeria has gotten the approval of Mr. President to redesign 200 Naira, 500 Naira, and 1,000 Naira. A lot of pros and cons have been in the public space. Some people are of the view that, of course, the big men will start to bring out their stashes of Naira. Some have begun to do that, because I was even told by some currency traders a few days ago that many big men, high net worth individuals, have been stashing their billions of Naira to exchange it for dollars. So that may also be adding pressure to what we're seeing right now, as the dollar is a scarce commodity at this time. Some people do say, okay, it is a good policy. Some others are saying it is not a good policy at this time, bearing in mind that 2023 elections is just by the corner. And how do you get the rural population to exchange the old Naira notes for the new Naira notes? As many of them, in case you missed the show like last week, you can check out our YouTube channel, discussed it. I had the 2 directors here last week, and we weighed the pros and cons. 2 directors of the Central Bank of Nigeria, Currency Operations and Monetary Policy at the department, where I also took the feedback of Nigerians and I asked the directors those questions. Don't forget that the new Naira notes will be launched by Mr. President on December 15th, according to the Central Bank Governor. So the Naira notes we do have now are still legal tender till January 31, 2023. So from when Mr. President will launch, from December 15th to January 31, you have that space to exchange your old notes for the new ones. So many views on that. But let me continue with the market. Shall we, guys? Let's move over to the United States. Okay, this is Africa. Let me talk a little bit about Africa. As you can see, red numbers across board. South Africa, Ghana, and Kenya down. EGX30 in Egypt trading up 18 basis points. Don't forget that COP27 has kicked off in Egypt, and the market is looking very positive, 18 basis points there. Now let's move over to the United States, where we saw on Sunday US stock futures slightly declined as investors anticipated a week that would be busy with both the congressional midterm elections and the most recent consumer inflation report. In the United States, the talk right now is that which party will control Congress after Tuesday's midterm elections, and that will determine how future spending will be allocated. So you can see how politics is related to the economy. Our election is just a few months away. But we're seeing that both the House and the Senate in the United States are currently under the Democratic control, and the oil and gas industry is saying that they might just get a boost if there is a sign of a Republican victory, or perhaps a Republican victory would indicate increased support for oil and gas companies in the United States. Now, on the economic front, investors are expecting the CPI report on Thursday to provide more insight into the Federal Reserve's efforts to combat inflation. Now, in the European markets, we saw that stocks opened lower this Monday as investors prepare for a busy week in U.S. politics, which includes the congressional midterm elections and the latest consumer inflation report. You recall that last week I told you that the Bank of England raised interest rates by 75 basis points. That's 0.75%. Just what 75 basis points means. But it warned that the UK economy is in the midst of its longest recession, and the US Federal Reserve followed suit on Wednesday. But while we were sleeping, overnight Hong Kong stocks led Asia Pacific gains as China's trade data fell far short of expectations, marking the first annual decline in exports since May 2020. Now let's move over to commodities and see how Brent crude, one commodity we so much depend on in Nigeria, is doing. Though we've seen lower production volumes due to crude oil theft, I hope that, because we discussed crude oil theft for almost 2 weeks, Nigerians were really so inundated with crude oil theft. What is in the news right now is CBN Naira redesign. What else again? The 2023 elections, we should be debating or we should not be debating. Those are the things in the news right now. But oh God. Anyway, but the cocoa of the matter, like I say most times on the show here, is that we've got to get this right next year, because the economy isn't smiling on majority of Nigerians. About 80 to 90 million people are in extreme poverty, even though Nigeria overtook India in the World Poverty Clock in March, but it's not looking pretty at all. Many Nigerians are living on less than $1.90 a day. So I hope that all the presidential candidates are taking note and not just talking. I will do this, I will do this. We need to really hear the House on each of these social and economic issues. But if we take a look at Brent crude, the futures fell to about $97.37 a barrel in early trade after falling as low as about $96.50 earlier. U.S. West Texas Intermediate crude was trading at around $91.24 a barrel, down from a session low of about $90.40 earlier in the session. We've seen that Brent crude that has at least maintained the price higher than our budget price, because for 2021-2022 about 65 to 70 US dollars. So Brent crude has been trading above the benchmark price, but Nigeria's revenue has not reflected that in the last few years. However, a rise in the US dollar has weighed on all prices, even as the price is right now. Now let's move over to gold. As you can see there, gold, or what is called the bullion gold is considered an inflation edge, but rising interest rates reduce the non-yielding assets appeal. We've seen that prices are slipping for today from a 3-week high scaled in the previous session as the United States dollar regained some ground. I've always told you on the show that there's an inverse relationship between the US dollar and gold. If US dollar is appreciating, you see gold going like this, it goes like this. This is what they call an inverse relationship, opposites. Yeah. Okay. So, and that is also making the greenback priced gold more expensive for holders of other currencies. Now, on the fiscal front, the World Gold Council reported in a Friday note that a stable local gold price, a weak renminbi, and economic uncertainty boosted gold sales in cities like Beijing and Shanghai in October. Now let's move over to what's happening right now in Egypt, at least this week. The United nation's flagship climate conference began with top officials urging wealthy countries to finally fix their broken $100 billion promise, while the contentious issue of reparations was added to the official agenda for the first time. The COP27 summit, which began on Sunday, brings together delegates from nearly 200 countries in Egypt's Red Sea resort town of Sharm el-Sheikh to discuss how to address the climate crisis. Climate finance will once again play a critical role, as it has since the first United Nations Climate Conference in 1995. It comes after a string of mind-boggling extreme weather events around the world. In the last few months, for example, we saw that 1/3 of Pakistan was completely submerged by historic flooding, and Nigeria experiences worst floods in decades. China also experiences most intensive and prolonged heat wave on record. A historic 2015 Paris Agreement set an aspirational temperature threshold of 1.5 degrees Celsius. Okay, so let's see how the meetings will go today. Just before I came into the studio, I saw prime ministers of countries, Ono Konjo, the Kondozi Konjo, while there, the DG of WTO, climate proponents and all of that. Let's see what would happen this week. There's been so much talk about, Africa is not contributing so much to world population, so why should we be talking about it to allow us to even develop first to your level? Anyway, so many of that talk this week we expect. All right, let's quickly take a break, and when we come back, my guest Tajudeen Olayinka, the Chief Executive Officer of Wyoming Capital, will be joining me virtually to speak about what we're experiencing in the market, especially as we have just a few weeks to the end of the year. Will this be really a profitable time to invest? That is, if you have money to invest. We'll also be looking at companies that have released their earnings, at least in the last few days or in the last about 2 weeks or so. What are those companies' earnings telling us? We will be right back after this break. Do join us again. This is Moneyline with Nancy. How vulnerable is Nigeria? What are the economic challenges that the next leader, the next administration would inherit?
Part of the strategy really is to ensure that people have money in their hands.
We also need fiscal policies and actions.
The aspiration for us is to make Nigeria a net exporter of petroleum products.
We want to steer discussion to good economic policies to the benefit of the country.
It is in difficult time that nations take decisions to build and build their country.
You either make more money or you reduce your spending.
If you waste time or you spend time, what you are doing is you are wasting your ability to create wealth.
We'll still be talking about Nigeria's problems, because Nigeria's problems know the finish, you know? Alright, welcome back. Tajudeen Olayinka, the Chief Executive Officer at Wyoming Capital, is joining me right now virtually from Lagos. Mr. Olayinka, thank you for joining us, and it's always nice seeing you. Welcome to the program today.
Yeah, thank you, Nancy. Good morning.
Good morning. Yes, let's get started with a review of last week's market. We saw that the Nigerian equities closed in the positive last week. I did say in my market diary analysis earlier that we've seen the year-to-date return moderate to about 3%. Just in 1 minute, encapsulate for me how the market traded last week and why we saw that positive close amid the negatives that we've seen at least in the last few weeks.
Yes, market closed positive, just slightly positive last week. The same way, we have a month-to-date, positive figure. But if you look at quarter to date is still significantly down, and that means that even this month of October, beginning from this month of October, we haven't seen much significant recovery in the market. So if you look at year to date of 3.6%, yes, it's something that present the clear picture of what the market has gone through in the last few weeks, in fact the last few months. We've seen a very bearish market, even though it was positive last week. That positive figure is not something to celebrate, given that the market has experienced very significant drop in prices and those things that will have made investors to smile. So for me, even though it was positive, I still see a standards of this market last week.
Now, if we take a look at how the markets, from what your analysis has told me right now, we're seeing significantly low prices. How profitable is the market right now, perhaps for a new entrant? Is this a right time to enter? That's question number one. Question number two is for people that are already investors in the market. How can they really balance their portfolio at this time? Since that we're seeing, this is not really a market correction, is it? But since as we're seeing that, especially the year-to-date returns is really shrinking almost week on week.
Yeah. Like I said, the market is still significantly down, which offers, new opportunity for those investors who might want to come into the market newly, to take advantage of low prices. Has the market come out? I wouldn't want to say that, because for those who are speculating, who wish to come in at a time when market has bottomed out, may not really be keen at taking such a decision. And so anybody who is coming to the market now must be those investors who may wish to invest for a long term. If you are investing for a short term, those short term price movement may still be negative because of the fact that we are in a period of prolonged repricing of securities across market and instruments, including the pricing of loans and advances by banks. So during this period, and more so that inflation figure is still not smiling. We cannot assure anyone to say that if you are speculating, this is time to come to the market. No, but if you are willing to invest for a long term, this is time to come to the market. And as market goes further down, then you continue to also come in again and average down your cost. So it's good for those who are doing long-term investment. 3.6% is quite low for a market for a market like AGS. Market is so troubled because of the inflation number and and interest rate. So when the market is in a period of prolonged repricing of instruments, those who want to do long-term investments can take advantage of those low prices. But for those who are speculating, they still have to possibly wait a bit and see how they can benefit from the price movement. Don't forget also that our market is now showing the fact that it is largely internationalized. It's an internationalized market. In this case, what happens here and what happens elsewhere can both affect the market, and that was what we saw in the price correction of the Airtel. So if you are investing in the market, don't just look at what is happening here alone. You have to look at what is happening in other clients and how stock market are performing in those clients before you can then say your market prices have put up out in your own market. So we are in the period of a prolonged repricing of instruments. So long we still have inflation around, so long the CBN is still tinkering with MPR, we will have this kind of situation that we have today. So for those who are coming in newly, yes, the prices are low. If you are looking at long term, if you have a long term horizon, it's a good buy. But if you want to speculate, you have to be very careful so that you don't burn your fingers.
Okay, perhaps will I take that as my answer, because I wanted to ask you how long you think the repricing of equities will continue. But it seems you said as long as we have inflation that is high, as long as interest rates are also being announced to readjust inflation rates, perhaps that repricing will continue. Should I take it as so?
Yes, exactly. That is what we have seen since the beginning of interest rate hike to 13% and then 14%, 14.5 and then 15%. So for long we still have an interest rate hike, and of course because the fact that banks are also repricing loans and advances, which is affecting listed companies, especially companies that also depend on short-term finance from banks to operate. So all these things are affecting the market and affecting prices generally. So we will remain on this prolonged pricing of principle so long we still have inflation around.
Okay, let's talk about the tier 1 banks, really, because we've been seeing earnings coming in from quoted companies, and I want to start with the banks. Let's take a look at the tier 1 banks. We have banks like Zenith, Access Bank, GT Bank, which other bank? First Bank, UBA. Those are the tier 1 banks, really. What is your view about their 9 months? Some are bringing out unaudited financials. What do you have to say about that? And the way that we're seeing that the banks, apparently, majority of them are right sizing already. Majority of them are losing their staff or have lost their staff due to the Japa syndrome, especially in the tech department. Many of them have left the shores of Nigeria to seek better, greener pastures elsewhere in Canada and in the United States. What do you have to say about how that is impacting the bottom line of these banks?
Well, I think the fact that key or quality staff are shouldn't really customers who are taking loans from them are also being confronted with a very, very harsh environment of business. So it's becoming a challenging time for the banks and also for those for those companies that borrow from them. So for me, I think fairly well, though they have performed well in terms of cost recovery, but we haven't seen significant cost recovery on the part of banks, especially if you look at their earnings per share. It's just a slight growth in a slight movement in earnings per share across board, except maybe FBM holdings that print a very significant leap in its cost recovery, perhaps because of the fact that it was able also to recover very, very significant, made a significant recovery in loans that had been written off in the past. Loans that had been written off way back in 2015 that came back to the book of the bank, and also that gave the bank a leeway to be able to recover most of its cost, and that is a positive news for investors who are playing that space and who are holding aviation stock. So for me, generally for banks, they happen to reprice loans and advances at a time inflation is going up, at a time their customers are being challenged by myriad of problems, by myriad of macroeconomic imbalances. It's just a terrible time for both customers and banks. But for the staff that have left, I believe they will be able to have a good replacement talent. Nigeria is never in short. It's never in short of quality human capital. We have them around. We only have to give them opportunity, and once that opportunity, they will excel. So for banks, they haven't done badly, but they haven't been able to recover costs significantly. More so, we are beginning to see just a moderate rise in their NPL, non-performing loan. Actually, having to make those provisions at this time. So we are seeing they are seeing that as a threat to them, but not so threatening as to put them on the loss machine. They are still reporting positive profit after tax and positive earnings. So for that, I think